two, one. And we're live. What's going on, everybody? Welcome back to another stream. We have the S&P continuing to perform very well. We have Bitcoin dumping all the way down to $66,000. Touching the $66,000 range. And with Elon Musk a couple steps away, seems like, from becoming a trillionaire with a SpaceX IPO just over the horizon. And we have Anthropic with a pretty wild last 30 days or so. We have Mark Cuban dumping all of his Bitcoin. We have a bunch of interesting stories here to talk about, a couple updates on X as well. So I'm excited to talk about it. We have Mr. Thomas himself, my co-host for this great show, as always, every single week to talk about it all. Thomas, how's it going, man?
Yeah, I'm doing good. It's Bitcoin is down even as you're talking. It's close to 64 now.
Oh God, are you serious?
Yeah, and dude, yeah, there's a lot going on in this past week. Well, outside of Bitcoin too, but there's a lot going on with Bitcoin, MicroStrategy, Sailor, STRC. So we've got a lot to talk about. But happy to kick off wherever you want. We'll just go.
Yeah. I kind of want to start. So there was. Let me see if I can pull this up really quick. There was a clip here. No, we'll start with this. Okay. By the way, for those who are watching, if you haven't already, please do take a second and repost the stream if you haven't already. It really does help us out in getting the show out there. I really do appreciate it. So this first story here was on the SpaceX IPO. I wanted to hit this first. So official IPO offering, it's going to be $135 a share, implying a valuation of $1.75 trillion. And so here's just some extra context for the SpaceX IPO. It's going to be happening very, very soon. It's going to be probably top of mind for a lot of people. Everyone's talking about it. Even the even all our crypto people are excited about this. So I know everyone and their mother is going to be watching this IPO, whether or not they participate on the day of it. Everyone's going to be watching it. It's going to spawn a whole new industry of the space and defense industry. It's going to be a whole new thing, a whole new section that people are going to be watching. And so it's going to be very, very cool to see how this stock, performs in the market.
Yeah. So this is interesting that so Polymarket, the prediction markets pretty much nailed the pricing. This is pretty much exactly in line with what we expected, and we've talked about this over the past couple of weeks. I do think that there's a few nuances here which could make things interesting, which is one, it's a low float. So, we're talking about a $1.8 trillion market cap for all of the shares. But how many shares are actually available to the market, right? So when you look at it, if it's a smaller number, and it is a smaller number in this case, a low float potentially makes it that is possibly what kind of sustains that kind of high level of valuation, or possibly higher if it goes on a run. And that's because you don't need, it's not like there needs to be hundreds of billions of dollars of buying to sustain this valuation, because there's not that many shares that are actually going to be available. So now the thing that I think is, and as it said here, is a $75 billion deal. So the thing that I think we need to really consider here is why is this so hot right now, particularly amongst your sort of, as you said, the crypto people and all this kind of stuff. And it's partly because there's been such a massive swing of momentum back to tech, futuristic tech. The exciting stuff out there is you've got AI, quantum to some extent, but then also space. And space is just the best narrative you have. In fact, it's probably even better than AI, just in terms of capturing the attention of retail. And when it comes down to it, it's what's the time here? What's the total accessible market of space? And that's where you can kind of get funky with the numbers. You can get silly with it. You can get a narrative going. That's how it's going to trade at 200 times earnings. It's going to be stupid, I think, but it's also, I don't know. We've talked about this before. Are you going to take a position in it? I won't be, but that's just because I know the numbers are stupid. Like but I'm also fully, I don't like, I could easily see it ripping higher early on just because
Yeah, I
it's a
could
great
too.
narrative. It's a great narrative, and people are excited about space and all this stuff. I mean, I just don't want to touch it because, on the flip side, where is the, it, like I see this going up like a rocket ship and crash landing too. And the reason why I say that is because what are the fundamentals of this company, in the sense of the fundamentals of its valuation? I know it's a great business. It's making a ton of cash. It's got some awesome products. Like, we all love, Starlink is amazing, right? And I mean,
Yeah.
I think it's absurd. It sucks ever going on a plane without Starlink. Like, some of the offerings are amazing, and frankly, the geopolitical stuff, like Elon's ability to control wars with like, he can literally be like, I'm switching off internet to your country now, or I'm
I
switching it on.
know.
I mean, think about how
Insane.
powerful
That's
he is.
actually insane.
Yeah, like
Wow.
he is the true sovereign individual. Elon Musk is more powerful than most nation states. Like, Elon Musk is not as powerful as the United States. But who is honestly, like, let me put it like this. If you're all right, okay, you're let's make it real practical. You're in the let's say it's Russia versus the Russia-Ukraine war, or it could be the Iran war, or whatever. Who would you rather have on your side if you're Iran, say? Would you rather get, like, I don't know, France to be like on your side, or would you rather have Elon Musk? Like, that's the
Mm,
question we'd be genuinely asking, in terms of what's more powerful. Like, you can have Germany, or you could have Elon Musk. That's what we're talking about here, in terms of, like, the sheer power of one man. He's going to be worth $1 trillion, at least, like, on paper, right? And it's not
yeah.
exactly liquid, but then what the hell? What's the difference? It's not like one man can only spend so much
You still
money.
borrow against it.
Yeah,
Still
and I
use
mean,
it.
also, like, it's not like, what does he need? There's literally nothing in his life. Like, let's put it like this: Elon Musk has everything he could possibly want that money could buy, and his
Yeah.
children and grandchildren and all of his descendants have that too. There's nothing like an extra
Yeah, I
few
just
hundred
want a cool
billion.
little millie. I just need him to send me a cool millie. You know what I mean? Just
Yeah.
just slide me a little bit.
Well, look, his argument is, I could try and, like, the best thing he can do for people is, I'm going to build technology that's really helpful for humanity. And, look, maybe it turns out that is true. I do think it's, by the way, I don't know if you've noticed this. It's probably an under talked about thing with this, which is the way they've changed, or he's changed the goals with respect to Mars. I don't know if you've taken a note of that, but SpaceX isn't, for the longest time ever, the goal was, we're going to create civilization on Mars. And then he also used to talk about how the moon was kind of like, forget the moon, like, it's a distraction. But now they've actually switched up the narrative, and now it's like, the goal is, we're going to build a colony on the moon first before going to Mars. And I only bring that up because that is a case of the public markets affecting the goals. And by that, I mean, the reason why you switch that up is because it becomes a lot more practical. Like, hey, we know the Mars is a moon. Like, well, I was gonna say it's a moonshot. It's a Mars shot. It's so like, almost like a dreamlike
Yeah.
vision. But the idea that, hey, we're going to build out onto the moon, and then that's going to enable us to, send rockets out to different asteroids, and we're going to start mining asteroids, and we're going to start bringing back resources. You can create a more of a realistic path to monetization through this thing. Whereas when you're just going, yeah, we're going to go to the Mars, it's like, all right, when, bro? When are you going to Mars?
Right. Right.
And if it's not happening in the next few years, which obviously it's not, it starts to become like, how do you sustain progress and momentum?
You know, it's
And you
similar
now,
to
yeah,
It reminds me of like the promise of like the metaverse back in 2021. It's like a big idea, very easy to sort of wrap your head around. Kind of like the idea of it's like, oh yeah, like totally makes sense. The whole world that is this and this. There's tons of money. It's going to be here. Everybody's already online, et cetera, et cetera. It's almost
Mm.
seems very similar to that. Like people are
It,
talking about recreational trips to Mars already. I'm like, maybe, I guess, but I'm like, are we
it,
that close? Like,
no, well, I'll say this: it is and it isn't. In a lot of ways, it's exactly as you described. But I think there's maybe one very key difference in that the Mars thing is actually cool. Like
mm,
even like the problem with the metaverse thing is even if they pulled that off, it would have been pretty lame. Like even if they achieved their dream, it would have been like, what are you trying to build the Matrix or something like this?
I
Like
think people were just they watched Ready Player One, including myself, and just thought it was going to be like
yeah,
the next
yeah, and
thing, sort of thing.
okay. Look, it is an interesting vision of the future, and I mean, I think that's what's so exciting about this stuff is because yeah, it's science fiction, but it's science fiction with a betting market attached to it that you can
Mm,
basically like. It's science fiction, but there's a price attached to it, and if you're bullish on you think it's a little less fiction and a little more reality than maybe what other people do, and then you buy the stock, you're going to do well off it. Or conversely, if it's actually really just more fiction and more fake and it's not going to happen, you're not going to
mm,
do well. My concern with it is that what you're really betting on is the sci-fi narrative and all this kind of stuff because the fundamentals are, it's so different from buying like, all right, in this post here, it's got the size of Saudi Aramco's. Saudi Aramco is a good corollary because it's a completely different. Saudi Aramco is just this boring oil company. I mean, it's not that boring, but it's my point is it's like a real world, solid fundamentals. Like they make money, they generate cash, and you can value the cash flow, and you get a yield on your investment. And if you think it's a justified by the price, the yield justifies the price, you can make bet on that, and there's a fundamental flaw to the valuation of the business because you can, if nobody else values it, you can still hold it and generate cash, and you have a real world business. But if you hold SpaceX stock, and then the narrative falls out of it, and you're left holding it, it's not like you've got it's not like, all right, yeah, but I'm going to be generating. Let me put it like this: there's no dividend coming for you. Like, there's no dividend. There's no yield coming for this for owning it. You're owning the bag, and you just got to hope this bag becomes exciting to other people. And it
yep.
might, like, it's cool. Like this is, it's and honestly, this stuff is like capturing the attention of. It's probably part of why Bitcoin is not doing well because it's that same kind of for the people that want to invest in the future, that want to invest in something that's exciting. It kind of it's probably taking some of that mind share. Well, there's no question it is.
But yeah, and kind of going along with that, I just moved over tabs just because going along with this topic here.
Mm.
World stock market's at $150 trillion, global stock market for the first time ever. Just an interesting stat here. Interesting. There's all sorts of things to invest in. Like in 50 years, the optionality is going to be kind of crazy. Like Elon and many others have said, I think it's just going to have to expand. I think
Mm.
it's going to look different. Like I'm not sure how they're going to value companies. Like I don't know how we're going to be. Like I don't know if earnings reports are going to be run the same way. Like I don't know what that's all going to look like long
Well,
term.
the, the,
But yeah, interesting stat here.
well, you know, you would think that in an inflationary system, stock market is just going to keep going up and up and up. I do think, and what I do think is interesting is in this world we have right now where AI is creating so much value, but it's doing it in this weird way where it's kind of deflationary because you have a situation where it's like, oh, I used to have to pay someone hundreds of dollars for some service, and now I can just get the AI bot to do it for me for free.
Yeah.
And then it's like, it's kind of, it has this weird effect on the economy where it looks like the economy is shrinking in a way because when you measure it by spending, the spending is going down, but the value is still there. And we're all just struggling to wrap our heads around what effect this has on the economy and on the market. Like, we know it's transformational technology, but how does it, in a world where, like, if you have a machine, I mean, I'm not saying AI is this, but just imagine, hypothetically, we have a technology that can give you everything you want for free. What happens to the economy in that sense? In a dollar perspective, it kind of goes down, right? Because, like, I don't need the dollar. I don't need the money. I'm spending much less because I'm getting everything I want, spending nothing in this hypothetical world. Now, I'm not saying AI is exactly that, but it's kind of like that a little bit, right? It's like, I'm doing my work, and I used to need some kind of software service. I used to need, I got to draw up a contract. I got to ask an accountant something. I've got to find an expert on this, and I've got to, use this software tool, and blah, 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 blah. A million different services, which are, you used to pay. And now suddenly it's like, ask the bot, generate it for me, beep, 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 got my answer, spent $10 instead of thousands of dollars. None of that is captured within the typical system of our economy. And that creates all kinds of weird effects that I don't know if people have fully captured or grasped in terms of what does that mean for the total market, the total economy. I mean, okay, I want to get your view on this as well. But for me, I'll just say this. If it plays out the way I'm describing, where you have this kind of deflationary effect of the technology, I think it has to be counterbalanced with money printing. And I say that because we have all this debt in the world. We have all of this prescribed inflation that needs to come because our economy is managed by the central banks, and the Fed has a mandate for 2% inflation. All of the central banks across certainly the Western world, but really the whole world, have this mandate for inflation. And if you have a situation in which suddenly the technology is becoming so good that it's able to generate things for you, that is kind of creating a deflationary effect. The only counterbalance for that is we just got to print so much money that total spending rises, even as we're getting all this stuff for free. And I guess that's probably and I bring this up because this reflects back on the original point about how you've got a $150 trillion market cap, you've got a $1 trillion, roughly one and a bit $trillion Bitcoin, and how does Bitcoin get to that higher levels? I think the narrative is going, hey, technology is going to create a deflationary force. It has to be counterbalanced with money printing, with inflation of some sort to counter these two effects. And that's where you get these kind of growing numbers. Because otherwise, I don't know how you get continued. Like, surely we're heading to a world where we don't need to have. I mean, if you just think about this from first principles, if we get a super technology, a super AI, then you don't need to have millions of different, it can, in a sci-fi perspective, if it can all be provided by the one thing, like, a spending collapses in on itself. It has this weird. I just don't think we've grasped what this actually means for the economy, and I think that's where maybe there's some uncertainty about the future when it comes to all this AI stuff.
Yeah, I think a lot of people probably share that same sentiment there.
Yeah, I guess it's like we've had this effect in some sense. It's a generic effect of technology, right? Like, prices, when you look at like technology when it comes to something like televisions and this sort of thing, it just keeps going down. I mean, flat screen TV 20 years ago would have cost you like $5,000. Now it's like you get one for $500, and it's probably 10 times better than it was 20 years ago, undoubtedly. So it's like, 1/10 of the price, 10x the quality. That's the kind of stuff we've had in like televisions. What if that is applied to much more of a generic you take that technology, but you apply it to everything. And I think also this is also why I'm sure you would have seen this chart. Have you noticed there's a classic chart which shows inflation in the economy, and it shows how prices of technology keeps coming down, but then the certain elements of the economy which cannot be are not sort of being disrupted by the technology, like housing, for example, because we haven't figured out a way to make houses much cheaper. It's not like we have some magical technology to make houses that we didn't have 20 years ago. So how the production cost of housing is going up. Healthcare similarly, because the production cost of labor is going up. Education is similar as well, right? So anything where you can't, I think in a weird way, what you want to be is like long the stuff that can't be disrupted by AI in a way, because that's the stuff that goes, well, on a relative basis, that price is not coming down. So, these physical things that can't be disrupted by AI, like in this case, well, in the case of, say, housing, which is what we've seen in the past, where, all this software stuff has come out, and yet the cost of brick and mortar and all this stuff, the physical costs, the real world costs, hasn't come down. But I also, I guess the great challenge when it comes to investing is also just trying to like map it all into your head and trying to figure out, you get all of these, like a million different ideas buzzing around, right? And it's like trying to create how do you synthesize it all into a one investable piece? I mean, what do you think about that, Kate, in terms of like, that there are these ideas, you've got AI, or you have the technology, you have narrative, you have macroeconomics. How do you think about that when it comes to like actually constructing your own portfolio? Like, what are you focused on, given that there's a million things you could be thinking about, but you can't also like optimize it all in your head at once, right?
I mean, fortunately, I've got all these traders every single day that we do spaces with that do a good job of keeping up with the world markets, stocks all across the board. So they're like very active in the crypto markets and the equities. So I guess in my head, like some people are big time investors in they try and become like an expert in whatever field that is. And for me, there's too many fields like that. There's just no way I couldn't go become an expert in like quantum computing, just to go, become an investor in quantum computing. But you can do a little bit of research. You can find out who are like some of the more respected names and stuff. And for me, for what I would tell people is just to find a network of people who are already doing research with more experience than you, who have been in these markets, like either, for way, in some cases, as old as you've been alive sometimes. They're just like, dude, I've been here, I've seen everything. And you kind of latch onto them and see what they're looking at. But certainly kind of like it's kind of, who was it? It was either, I think it might have been Calidora. She's the CEO of Ostium. Maybe it was somebody else. But they're talking about how like the financial world media has kind of become like a form of entertainment, kind of like how if you look at Polymarket's Twitter account, it's just like breaking news this, breaking news that, new, like some just random statements. And it's becoming like that is the entertainment of choice for the financial sector. And so that's been interesting to watch. But for me, like, I think having some big winners in every main sector is probably the best idea. Like you probably want a couple in the anti-money. It's like, I think you keep it pretty simple. You got a couple things that don't exist in the stock market. So like your gold, some of the commodities, Bitcoin hopefully is in that category for you too. You got a couple in the defense world, like the Palantirs, Lockheed Martins, things like that. And then honestly, dude, I think even though it's interesting, like I think most people probably could do well with the majority of their portfolio still just being, even after all the research and all the fun stuff, you end up just throwing most of the money into the main stock market or Bitcoin. it ends up just being that boring. I feel like, and then because that's what I think maybe people miss a lot of times in these spaces is people will be talking about what they're buying and investing and selling, and people are like, are they just like supporting their whole portfolio? I'm like, no, no, no. Like 80 to 90% is in like the main stock market. They got like 10 to 5 to 20%, whatever percent it is, to trade and invest in smaller places and stuff and move around a lot. I was like, you're not just generally rebalancing your portfolio every 3 or 4 hours. Like, I mean, some people are, but that's not generally what it is. You know,
And
they're
it's
not
not a
just like,
healthy thing. Yeah,
yeah.
it's
So
not a healthy thing to do. With that said, I think we're burying the lead a bit here since you brought up Bitcoin. Bitcoin is dumping right
yeah.
now, or has at least recent terms. Let's talk about MicroStrategy. Let's talk about all of
Oof.
the,
Oof.
yeah, like just
Oh
the,
heavens.
like
Yeah. Let's
let's
look
talk
at, yeah.
about
Strategy's bad. The strategy's not looking so good. So yeah. So
everything
tell
that
tell us.
MicroStrategy,
Yeah. What's going on here?
like, I mean, first of all, it is, yeah, like, all right, let's give it the real reason that Sailor is selling 32 Bitcoins, because I think, like, genuinely, I'm actually worried about Sailor's mental health. Like, and
Really?
I say that because he is acting so, I'm trying to choose my words carefully. It's unbelievable what he's done. Let's actually just lay it out. He he invited investors to invest in his an STRC, his as he marketed as like a money market fund, but basically it's a high yielding preferred stock, but it's a high
Yep.
yielding product. It's offering 12% interest or 11.5% interest, and he was able to generate uh, a lot of demand for the product because he's offering a high yield. And by the way, he holds many years of cash on his balance sheet. So he's attracted people knowing that, hey, they'll be able to pay the dividend for years to come. It's a monthly dividend, and I know it's a high rate, but the people investing are going, yeah, but MicroStrategy, yes, they're going to have to pay a good interest rate, but they hold billions of cash. They hold
Yep.
billions of cash. So he's attracting all this demand. He's loading up on leverage. And then what he does is he takes all those billions of dollars that he has sitting in cash that's been used to attract money. And then what he's going to do is he's going to pay off and buy some of his convertible bond debt back that was, by the way, sitting at 0% interest and wasn't due for 3 years. So he takes all his money, all the cash reserves, and buys off these bonds that were sitting away, due in 2029, fairly irrelevant stuff. And then there's a problem. What's the problem? Okay, so he's got no cash. He's got a lot of
Yeah.
Bitcoin, right? He's got a shit ton of Bitcoin, but he's got no cash and he's got all these interest payments. So he has the bright idea of going, well, you know what I'll do? I'll show the market that I can sell Bitcoin to fund my interest payments.
Yeah.
Oh yeah, I'll sell some Bitcoin. That proves it, right? I can sell Bitcoin. I can fund my interest payments. So what does he do? He sells some Bitcoin. And then what does that tell the market? Holy shit, he's selling Bitcoin. Like the
Hmm.
worst possible thing. He's confirmed all he has this genius idea. I'll show the market I can sell. And then the market's going, wait, you're not going to do that, and yeah, I'm not really going to do that. You're not. Oh my god, you're selling Bitcoin. And so what happens? He sells Bitcoin. His stock is down 20%
Yeah.
in a week instantly. It's Bitcoin the same pretty much.
If anybody remembers the goalposts, it was over here a couple years ago.
Yeah.
It's all the way over here now, folks.
Yes. I mean, we could put it. We could talk about how he's a hypocrite because he constantly posts never sell Bitcoin. We could. I mean, if somebody even wanted to call him a liar, maybe a bit harsh, maybe. But my concern is it's actually stupid and it's self-destructive. That's the real problem. The real problem is that what it's damaging to MicroStrategy, it's damaging to Bitcoin because he's created a fear spiral out of nothing, and now he's actually massively damaged his own every financial product he has, whether it's his equity, whether it's his credit instruments, whether it's the underlying balance sheet of his Bitcoin holdings, they've all been impaired by his stupidity. And I think it's such a what I think, Cade, we should talk about is what caused it, right? Is it because, like, the bad governance? He must be surrounded by yes men, because it wouldn't have taken, like, you don't have to be all that smart to be like, whoa, Michael, like, wait a minute, like, maybe don't force yourself into being a forced seller of Bitcoin. Wait, your plan is you're going to get over leveraged, and then you're going to be a forced seller of Bitcoin, and this is going to improve your position in the market. Like, that's a really obviously stupid idea. But if you're Michael Saylor and you're surrounded by people that are just like, yes, Michael, you're a genius, Michael. Yes, Michael, we love it, Michael. You never actually, you come out with these absolute brain fart ideas, and you don't get anybody actually, just frankly, someone in the room, an adult in the room telling him, like, wait a minute, like, that's not a good idea. Like, and it's so interesting because the hubris and the just complete lack of self-awareness and a lack of awareness of the market to do this. And he may have broken. I mean, SDRC is now at 95, so it's he's marketing it like it's a money market fund, but it's just down 5% in the last week. Like, oh, that sucks. That sucks for anybody that bought in there. But hey, it's only 5%. But certainly he's crushing his equity, and everything is being hit right now. And he'd be lucky if this is, if this is the end of it. Okay, his actions have cost himself 25% billions of dollars, but he wanted to teach the market a lesson. Well, I hope he learned a lesson, because, like, he literally said, like, I'm going to inoculate the market. Like, think about the arrogance you have to be like, I'm going to inoculate the market. Like, he tested liquidity, and liquidity is not there. Like, if you're going to be selling your Bitcoin, that's very dangerous, because you're telling the market you're the biggest buyer. We've talked about the Eggman theory, right? He used the Eggman of Bitcoin. He's the guy buying Bitcoin. And if he wants to tell the market, actually, I'm going to be selling Bitcoin, price is going to dump. And that's going to destroy, and it's going to have this very negative reflexivity to it, where it's going to dump his equity, it's going to dump his credit instruments, it's going to dump Bitcoin, which is going to keep propelling itself. So I think that, if anything, I said to you a few weeks ago, the best thing he could do is go to the beach. And certainly, if he took a holiday over the last month, Bitcoin and MicroStrategy would be in much better position. Now I'll say he probably needs to put out a tweet saying, like, well, first of all, he needs to build up his cash reserve again. Then what he needs to do is say, sorry about that. That was stupid. Don't know why I did that. Just like the way he's backtracked on a bunch of other things in the past. Like, I don't know if you remember.
He's gonna have to sell again. I just know it. There's just no other reason. There's no, like,
No, what he can do is, there's still time. There's still time. He can sell some equity, build up a cash reserve. Stop selling STRC, because you can't build up any more debt. But he build up a cash, sell some equity. He's going to hit MicroStrategy shareholders. Like, that sucks for them. Sorry, you're making a bet on Michael Saylor, and he's not running it well. Sell some equity, build up a cash reserve, then say, hey, I'm going to chill here for a while. I'm going to go to the beach. We're going to sit on this. Bitcoin will return. Give it time. Like, we're going to let the market heal. Bitcoin will float back up. I'm not going to break things any further. But if he keeps selling Bitcoin, or wants to teach the market a lesson that he can sell Bitcoin, that's the kind of thing that triggers, like, a cascading crisis. So I don't know, man. I mean, it's concerning for me when I watch that, because, obviously I've been a big proponent of Bitcoin for such a long time, and I do hate to see one man potentially not even in a right state of mind that's in such control of the market. But unfortunately, that's the position we're in at the moment, where, Saylor has created a monster with MicroStrategy. There's no like he's created a monster. He's got 850,000 Bitcoin holdings. It's levered. It's levered up. He owes cash payments on it, and he's not managed. He's not running it well. And unfortunately as well, I think what's happened in the last little bit is people are losing. You start to lose faith that he's going to run it well, because like it's not a dire situation from a mathematical position right now. It's not. The problem is that it needs to be managed well to steer the ship. But if he's your captain, and this is a guy that, like, you have to have, if you want to believe that he can manage it well, like you need him to manage it well in order to make it through these choppy waters. And right now, he's not showing that he's thinking straight. He's not showing, like, frankly, like, yeah, it's worrying. I'll say that. I mean, what's your take, Kate?
Yeah, I think we've been talking. I mean, this has been like a rolling story for a while now.
Yeah.
I think it was only like a matter of time. Like there are all these poly markets already talking about it. Like, is he going to sell this year? It's kind of a strange thing a couple weeks ago when he started to just kind of pepper in a few different interviews. Like, hey, like we could sell Bitcoin. I kind of have sold Bitcoin before, and then the next week, everyone's like, oh my god, they sold. It's true. They sold. I forget how much that is. It's like 1 million. It's 32 Bitcoin. I don't know how much that is, but a minuscule amount compared to what they've bought. But still shook the Bitcoin world.
It's not the selling of the Bitcoin that's an issue. It's not the 32 Bitcoin that he sold.
Yeah.
It's getting rid of his cash reserve and then signaling I'm selling the Bitcoin because I might need to sell, and having this idea that, this will inoculate the market and the market will just be, I'll normalize the idea of me selling. It's like, no, like we're not going to normalize the idea of you selling, Michael. Like if we normalize that, that's a disaster. Like the problem it's not the selling. If he kept his cash reserve and then he sold 30 Bitcoin because he just wanted to prove a point that he can, okay, it might not have been well received, but end of the day, people would have said, hey, they've got some cash. He's not a forced seller. Maybe he's doing some tax loss harvesting or whatever. Maybe he just wants to prove a point, whatever. But now, if he's going to say, I'm going to be 100% Bitcoin. I'm going to get rid of all my cash. I'm going to prove to the market that I can sell Bitcoin when I'm a forced seller of Bitcoin. All he's signaling to the market is, hey, I might be a forced seller of Bitcoin. And that's not good. Like, that's not, I mean, it's great if you're a bear. If you're short, that's great. But if you're like someone that's, long MicroStrategy, long Bitcoin, long this whole ecosystem, it's a disaster. And the problem is that this man is long all that stuff, right? So the real concern is you go, wait a minute, what you're doing is self-destructive. Like you're hurting yourself. It's like it's honestly like watching a toddler smacking their head against the wall, and it's like, please stop, like please stop it. Like it's like the concern isn't that he's done something to hurt somebody else. The concern is like this is bad for Michael. This is bad for MicroStrategy shareholders, and he's the biggest one. This is bad for Bitcoin holders, and he's the biggest one. So, it's like, please stop hurting yourself, please.
It's hard to know where we are too. Like it's like in TV shows. Like, are we in a Game of Thrones where season 1 main characters get cut off and killed off season 1 kind of thing, and in season 5 everyone's different and different main characters. Like, will Michael Saylor continue to be the leader of the pack? Is he gonna start to roll over?
I think it's like it's not dire. It's just that it's just that you people are losing confidence because he's acting in a way that is erratic. I mean, when you start acting in a way that's self-destructive, people lose confidence that you're going. Everything can work if he's a rational actor and he's going to manage it in a way that's best for himself, best for shareholders, best for everything. They're not in that much debt. Like, it's really very manageable. However, when you start seeing him do really self-destructive things, you start going, wait a minute, like, this thing only works if you're acting properly. If you're just, and, yeah, I mean, it's not, you know, it reminds me in a sick way of, like, nuclear, like, you know, we have all, you know, there are these wars all out there, and between presidents, you know, there's this, obviously, this concept of mutually assured destruction. And, like, that's what's stopping us getting into, you know, that's what stops America and Russia getting into a real war, because we know, like, hey, we don't want to have, like, we can't have a situation in which we just start dropping nukes on each other. Everybody loses, right? Like,
right.
And the most important thing to keep that going, the peace going, the most important thing, the absolute critical thing, the critical foundational pillar of peace through mutually assured destruction is believing that the person on the other side is acting rational.
Mm-hmm.
Because if you believe that they're going to act in their own interests, then it's okay, because you know they don't want to do something that's going to cause mutually assured destruction. But, and I bring this up because it's the same thing with Michael Saylor and MicroStrategy and Bitcoin. You know, when you're holding Bitcoin, you know, like, hey, if MicroStrategy goes tits up and vomits up hundreds of thousands of coins, it would be a disaster for Bitcoin. But you also know that would be a disaster for MicroStrategy, and it would be a disaster for Michael Saylor. And you have to believe that he wouldn't want to do that. He wouldn't act in a way that would let that happen, because it would be mutually assured destruction. However, that whole belief system, the foundational pillar of that is that he will act rationally. He will do things in his own best interest. And when he starts to do something that's clearly not in his interest, it starts to shake at the foundations of everything else. So I don't think we're in a, I think we're very far from, you know, having a real disaster at this point in time. Like, I'm not actually that worried about Bitcoin or MicroStrategy or any of that from any kind of, I'm not really worried, provided that Saylor doesn't F this up. But the thing that's just the concern is just, you hate to see him doing stupid things, because every time you do it, you go, like, are you really the irrational, because, like, this only works if you're going to be smart about this, like, you know, yeah, sometimes I just shake my head, honestly.
Yeah, I'm not sure what like the traditional finance people think either. Like, on one hand, I was like, maybe they'll be happy he sold, because some people are like, hey, like, we get it, like, it's not that big of a deal. But then the other hand, I was like, other people are gonna be like, well, he went back on his word. How can you trust a guy who does that? And it's just kind of like,
well, it's not. They're going to see the same risks that I'm talking about here, and they're going to say, well, hang on a second, this is a key man risk, this is a vulnerability risk, and by the way, you know, key man risk, people can handle key man risk. When you invest in Meta, you're backing Mark Zuckerberg, and that's a lot of key man risk. Like, Instagram would not be, you know, Meta would not be very attractive. Like, yes, it's got a good network effect and all that kind of stuff, but end of the day, a large part of the value is, like, you got Zuck. Mm-hmm. People can handle key man risk, but you got to believe in the guy. Like,
yeah,
you know, and the thing about Michael Saylor and Bitcoin is, you don't have to believe in Michael Saylor's genius to believe in Bitcoin. You don't have to believe anything like that. He doesn't actually have to do anything. Nobody wants him to do anything. Like literally,
He's already got the Bitcoin.
You just don't blow up. Like
Yeah.
it's not like he need. It's not the Zuckerberg analogy is kind of a bad one in a way, because with Zuckerberg, it's like you need continued genius. Like, you've shown your genius in the past. Keep giving it to us. With Saylor, it's like literally, like, can you just go to the beach? Like, please, just don't blow this thing up. And
I think maybe in his head he's thinking end of year will pick up anyway. Like, I think he's counting on that 4-year cycle to play out. Mentally, he's just like, dude, we just gotta survive this year. Like, we just gotta make it and have trust that Trump will prop up the election for midterms. We'll survive to the end of the year, and Bitcoin will be back in 6 figures again. I think that might literally be his strategy.
Yeah, and that's fine. But then what?
It's not a terrible strategy.
That makes sense. But if your goal is to make it through the end of the year, then don't deplete your cash reserves.
That's also fair.
Buy off a bond that's due in 4 years' time. Like, hey, let's make it through to the end of the year. Like, I think what you're describing is a logical strategy, a good strategy. My concern is that's not what his strategy. Like, if that's, I
mean, he doesn't seem to be worried. Like, I don't know if he feels the same. I don't know. I'm not sure.
Well, his stock is down 80% from all-time highs. It's down 30% in the last week, or 25. Yeah. I would suggest to him, if he's not worried, he should be. Like, that's what I would say to him. If he's not worried, maybe it's time to get a little worried. I actually think that's part of the problem. I think he's too confident. He's overconfident. He's doing these things. It's hubris. Like, I can inoculate the market. Like, who thinks like that? Like, that's not, like, how about instead of inoculating the market, how about you focus on accumulating Bitcoin and don't blowing up. Like, that's a good start. Don't paint yourself in a position where you're gonna be a forced seller of Bitcoin to fund your dividend payments, because that is going to scare the bejesus out of the market. And you're not inoculating anything. You're just destroying value. That's all that is, really. Like, it's not like Bitcoin is down to 64K, and it's not a mystery what's happened here. Like, he's like, Saylor has come in and had a brain fart, and he's had a bunch of yes men that have said that's a good idea, even though it was truly one of the dumbest things he could have done. And he's gone, I'm a genius. I'm going to do it again. I'm going to inoculate the market. Like, they'll give me a Nobel Prize for vaccinating the market. And it's like, no, like, just stop. Like, quit your hubris, quit your arrogance. Like, you've accumulated 800,000 coins, and out of, realistically, he owns, of the movable supply of Bitcoin, because there's not 21 million really. There's a few million, we know that there's a few million that are kind of dead coins, or at least we think there are. So he's got 800,000 of the, his caller got it 5%, more than 5%, 800,000 out of probably 18 million coins available. Like, he's got a lot of the market, a lot of Bitcoin. And if he were to dump that, or be forced to dump it, it would be catastrophic. Now, you would think he's not going to, but he can take certain actions which make it more or less likely. And depleting his cash reserves, increasing his debt, all of these things make people nervous. So, my final message to Saylor is, please just go to the beach. Like build your cash reserve back up, and then go to the beach. Yeah. I guess that's what I'd say.
Pretty good advice. We've got Ray Dalio also sounding the alarm. He says, all great technology changes produce bubbles because no one can perfectly price, size, or timing of the opportunity. He's warning he said the AI bubble gets pricked when companies need liquidity and are forced to sell assets to raise cash. We're not going to play the whole clip because it's a little long. We'll play a few seconds of it here.
I would kind of love to combine these ideas because it's coming. great technology changes produce bubbles. And the reason they produce bubbles is because nobody can get it exactly right. Okay, you have to either spend a ton of money to capture your market share and so on, or, and don't worry about whether it's too much or not, or you don't spend enough money and you lose your market share. And it's very imprecise with a lot of competition. Okay, and then when people bet on the technology, which I'll bet on the technology, but they think that buying the stocks is betting on the technologies, which is a different thing because the stocks can be expensive and so on. That's a problem. And what happens is when wealth grows a lot relative to incomes, I want to distinguish wealth from incomes. Okay. Wealth is, you can create wealth very easily in the following way. You say, I'm going to have raise $50 million on a $1 billion valuation. Okay, that's counted as $1 billion of money, and now you're a billionaire, but you only put up 50 million. Okay, and so wealth, you cannot spend wealth. Wealth is, you have to sell wealth to get money because you can only think it has a problem with productivity. I do think but productivity, it has a big wealth gap implication. A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues? And how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
So I think it is, yes. And then that moment, there's always the issue of a bubble, and we can measure a bubble. I have indicators, and there's how many people are overowned, what's the sentiment, a lot of indicators for bubble. And we are right now rising closer to, not at, the same level in 2000 and same level in 1929.
Is there a specific level where you say, oh no, here's the one that we really need to worry about?
The thing about it is there's two parts to it. There's, quote, a bubble, and then there's the pricking of the bubble. And the pricking of the bubble happens when there's a need for wealth to be sold to get the money. Like normally in a dynamic of a debt problem. Sure. Okay, if you take Japanese bubble, take the 29 bubble, take the 2000 bubble. All of them have an element of, tightening money to because it can't go on forever. It'll find its bubble. The question is how long you let the bubble go before there's the pricking. So in order to do the market timing, to know how to market time, it requires both the understanding of the bubble and the looking for the pricking. And the pricking is the converting of wealth into money, because I need money in order, but I have wealth, so I have to sell some of the wealth in order to get the money. That's
all right. General knee-jerk reactions to this and his thoughts. He's been sounding the alarm, to be fair, for a while on a bubble. I think he just kind of comes on to make sure that people are aware still that we are still kind of approaching. But some people are fully against his thesis. They're like, look, dude, get with the times. Like, this is the new world. Get used to it.
Yeah, I mean, I think that there's two different things there going on, in the sense of what he's describing is the general market mechanics of what a bubble, like, it's without saying this is it. It's like this is how it works. It builds up the wealth, and then you need cash, and people sell, and then the value, it's like the liquidity isn't there. I mean, it's very similar to how Michael Saylor is like, I got $65 billion of Bitcoin. And it's like, well, yeah, to some extent, but if you try to sell that Bitcoin, you don't have $65 billion of Bitcoin. Like if you try and convert that Bitcoin to cash, it's not 65 billion, you get 20 billion. Like that's how that works, right? So I think that the question is our greater market in a bubble, or is the AI stocks? I mean, that's very difficult to say. I don't, when you look at like the market, there are certain conditions that generally tend to cause a bubble, and one of them being really low interest rates. We don't really have that right now. So that's the kind of thing, like, I would be more inclined to suggest, yes, we're in a bubble if we were sitting at 0% interest rates. realistically, when we got interest rates where they are, that's a great actually negating factor. And then when you look at it as well, you go, it's not like the stocks. It's not like stocks are up 40% this year. Like they're not. Like yes, certain sectors are running hot, but they're not the overall market. So I don't, you know, as far as the AI stuff goes, sure, but that's the trade, right? People are trying to 10x their bags in these AI stocks. So like, yeah, if you want to try and find a 10 bag, you might get halved. Like that's the nature of the market. I mean, that's what it's like picking volatile stocks. Speaking of which, is there anyone you wanted to shout out this week with Rex and?
Yeah, that's probably a good idea. I'm glad you brought that up. And yeah, for those who are watching, by the way, big shout out to all of you guys for tuning in. Hopefully you guys enjoy these streams we do every week. Definitely, if you do, be sure to follow along. Follow Thomas as well. He's tagged right above our faces. We definitely want to give a big shout out to Rex Shares for sponsoring today's show. There's actually a link down below the stream. If you guys do want to check out some of their various ETFs they offer, they're a great platform. Been working with them for a long time. Some of their ETFs, this one, for example, 2x leveraged. This is a 2x inverse Bitcoin. So obviously with Bitcoin being down lately, I think 3% today or so. We've got the inverse one, double that, obviously, so almost 6% on the day. And so for the traders out there, there are tons of opportunities. Like I mentioned with Rex Shares, they've got all sorts of different ETFs you can check out on their site. That link, again, is going to be below. And anytime we work with Rex, just want to make sure you guys know investors should carefully consider a fund's investment objectives. Oop. Not sure why my AirPod is falling out. And investors should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contains this and other info about Rex Shares. And if you want to obtain these prospectuses, visit their site at rexshares.com, link below. These both should be read carefully before investing. Again, one of our longest running clients. Big shout out to Rex Shares, as always, for sponsoring the show today, man. Big shout out to them.
Yeah, Rex.
So, yeah, big ups to them. Was there anything else you had on Ray, by the way?
Yeah, look, I mean, Ray is. I really like his macro. He's a great educator in the sense of, I don't know that like. I think the mistake you can make is trying to apply it. You learn his lesson, then you go, oh, I'm going to immediately apply it to this market, and it's not like I think it's. You know, it's similar to like what we talked about last week with that book 1929, like the book that came out last year, very educational book on the history of the stock market in the 20s and early 30s and what happened there. And it was a really interesting book, but the mistake you can make is you go, oh, that's where we're at right now. This is it, you know. Like if you go read a book on the GFC, don't necessarily think that means we're in the GFC. If you go read a book on the tech bubble, like of the late 90s, it's easy to map the past until today, but reality is every time is different, and most of the time the best operating model is nothing ever happens. Or another way of going is to say it's going to everything will keep persisting. So I don't like. You know, I like Ray. I think his lessons are, and by the way, it will all prove to be correct at some point in the sense of the market will have a bubble and it will have a crash. That's exactly how it plays out constantly, forever. That's how markets work. But that doesn't mean, and we can point to this video when that happens, whether it be next year or in 14 years' time. And we can say, well, Ray, you know, you described it perfectly. But equally, it's not relevant really when it comes to investing in a broader market sense. Now, it might be the case if you look at it when you want to talk about that SpaceX IPO, when you want to talk about great technology changes produces bubbles. I think that's a good example. When you have a great technology change and you go, hey, the world of space is open to us, and that's a great technology change. And is it producing a bubble in SpaceX? I would look at that and go, yeah, probably. Yeah, it is. So I think on a micro level, yes, absolutely. But I don't. Do I think that the S&P 500 is in trouble? No, I don't. So anyway, that's
Got
my
it.
max.
That makes sense. Yeah, I think Ray's got a bunch of great teachings as well. He has been sounding the alarm for a while now. I know he's not a big fan of the current state of these markets, I think. One of the last stories here I want to bring up here is we have Mr. Mark Cuban dumping all his Bitcoin recently, had a bit of a change of tune in his thoughts on Bitcoin. And Mr. Tom Lee actually commented on it, which was kind of funny on CNBC. And so we'll get his thoughts.
Mark Cuban said that he's now dumped or sold all of his Bitcoin, given that he no longer believes it's acting as a hedge against inflation or anything else. Argues gold has proven to be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, equity market, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, I think that's what always happens at the end of crypto winter. If someone asks me, is the thesis for Bitcoin or Ethereum broken? It's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it, really are what's scarce. And you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites. You need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves. And it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory.
Any thoughts?
Yeah, I mean, I don't think Cuban's really rage quitting. I think he's describing he's lost faith in it. Yeah, I don't know. I think Tom's right in the sense of it has been a disappointing period of time for Bitcoin. I do think that if Bitcoin gets to the end of the year, there will be, as you described, there's winter and then the spring comes. And I think that provided things don't completely blow up with, say, MicroStrategy, there probably will be Bitcoin will have its time again. But I also think that it's normal to see people kind of giving up hope in the meantime. And I don't, frankly, I couldn't blame people when you start to see some of these questionable things happening in the market. It does make you, I guess it's unnerving. So I understand why people could be unnerved by, hey, software is doing well, AI is doing well, and Bitcoin hasn't. What is that? Gold's done well. Why hasn't Bitcoin? I actually understand why people can be unnerved by that. So it's interesting. Yeah. Do you have what's your take?
Yeah, I mean, I think what you said is pretty fair, but at some point you have to choose assets that you think makes sense to you. I guess I've had the benefit of, like I said, being around the traders for so long. I just stumbled on a tweet a second ago from one of our guys, Steve, and like months ago he put out a tweet of his thesis for 2026. And it was just funny because like the thesis is played out. He goes, I expect us to range between 55 and 75 with a little bit of range on both sides of that. And then it'll be boring Q1, Q2. There'll be some small opportunities in the meantime, but that's my thoughts for the beginning of 2026. And so for me, I think having some basic healthy understanding of technical analysis is good. I think if you want to keep a sane head in these markets, I think anyone with that is like kind of okay, like slightly worried about Bitcoin, but nothing is broken yet technically on the charts to where people are like, okay, something's off, like in a very bad way. Something didn't work, or there's something wrong. Money's not going here, whatever. And so I don't think anything like that has happened for Bitcoin yet. I think Tom's kind of on point there. It's kind of like, I mean, rage quitting is a silly way to put it. But I think he's kind of like, yeah, like I'd rather make my money somewhere else. It's not rage quitting. He's just kind of like, look, I know this world more. I've got X millions of dollars sitting in Bitcoins. I'm sure it'll probably do well. I'd rather have my money here. It's gonna make me money faster. And if you're a business person or entrepreneur, honestly, like, might be true.
Yeah.
If you're just looking to make money in stocks, like, who knows? You know, you might be buying the top. SpaceX IPO next week might be the top. Like, we never really know. I mean, people are up in arms because the World Cup tickets are too expensive, and so the world's got all sorts of problems these days. But that's probably my general thoughts.
Yeah, I think that's right.
Yeah. Anyways, look, guys, for everyone who's watched back at home, I appreciate for coming through. I hope you guys enjoy these streams as much as we like doing them. Look, again, if you haven't already, please do definitely follow along. And if you want to check out those ETFs we brought up a few minutes ago, definitely hit that link down below the stream. Me and Thomas come on each and every week. We just talk about all the things going on in the markets, and so definitely be sure to catch us next week. And until next time, I think we'll catch you guys next week. Should be fine. So we should be good for next week. Thomas, any final words before we sign off?
That's it. Good stuff, man. Looking forward to it. Sure, there's going to be a lot of stuff to talk about next week too.
Absolutely.